But he's saying a big challenge that he has is taking action when there's quote unquote blood in the streets. Markets are down suddenly and sharply. Opportunities like the April 8th pro trades will come along again. Is there a way to prepare, train for, or develop the proper mindset for these times? The first comment I wanted to make was good on you, James.
Before we get rolling here, just a reminder to please like and share our videos. Your support helps us to continue to bring you the wonderful content that we share with you each and every week.
Good on you, James, for pointing out it. It's almost all mindset in that scenario in terms of taking action. I mean, yes, you've got to develop a thesis and read the charts and select the right time frame and select the right trade structure. But first and foremost, if you're freaked out, aka mindset, poor mindset, you're not going to take advantage of blood on the streets. So really good on his part for at least recognizing that, because a lot of people would kind of, I mean, a lot of people would say, it just kind of freaks me out. That's mindset, right? I didn't take the trade. And other people would say, well, I thought it was going to go down, keep going down. Which is, I would argue that's really kind of just lying to ourselves, saying, well, I think I could get long here, but I'm scared, so I'm going to tell myself I thought the market was going to go down. In other words, I think it's bullish, but I'm going to lie to myself and say it's not, so I don't have to put the trade on and experience a loss. Right?
Right.
John's familiar with we'll see in that. And then so there were three things I wrote down that I think helps from developing the proper mindset when we're presented with this opportunity. And we all see it, right? You're not always going to be right, but you know the market is really screaming down. Some bigger than others. I mean, April was a very volatile month, but we had a pretty aggressive move down. I would say in the context of the Russell recently, I think it was 5 or 6 red days in a row before it bottom Friday. I mean, that's quote unquote aggressive after you've been ripping higher and going sideways, right? So understand what blood in the streets is in the context, right? If you're just waiting for literal blood in the streets, you might get one a year, right? Mm-hmm. So you know, blood in the streets can be a scary pullback. Let's put it that way.
Right. Because this pullback was nothing overly large, but yeah.
No, but in the context of,
it might be. Yeah.
Over the last 30, 45 days, right? Exactly. So here's the way I think of it like that. So how do I prepare my mind and get in my mindset to take advantage of it? So to me, you want to get in the mindset and the framing that the market is factually at least doing 3 things. Number 1, it's designed to go up. The market is designed to go up. It's not designed to go sideways or down. Let me tell you what I mean by that. Let me contrast that with, say, commodities. They are not designed to go up. Crude oil, gold, silver, platinum, copper are not designed to go up. You have producers and commercial participants that are hedging price, right? So if I'm a producer and I don't want price to go down and I've locked in a price for the next month to a buyer, I'm going to play both sides of the market. I'm hedging it. So that's more of a business decision, whereas equities are designed to go up. I mean, several ways you could think of that, but to me, mechanically, it comes with short covering. What is one thing that if I'm short the market that I actually really am underneath? I'm a buyer. You say that again. If you are short the market, literally short shares, short SPX, even in short options, because the market maker has to take the other side. If you are short the market, you are eventually a buyer, right? So that's part of the mechanics. I don't want to get too caught up in that, but just understand it's designed to go up. And that's also why you have skew. And that's why skew in equity markets is more prominent in the put side, whereas crude oil, as you know, John, is not. It's almost equal. There's no skew to the put side, so to speak. That also is an indication that Markets are more worried about downside than they are upside. Markets are designed to go up. Number two is we're in a defined uptrend. The SPX, NDX, and even the Russell, they are going up, meaning the odds of buying pullbacks are better plays than trying to jump on a short. And I can tell you there are a lot of traders I don't know are really good traders that just struggle with that. They want to be contrarian. They want to fade every little move. You know, the market's been up too much. All the guys that just own equities and don't do any work trading are getting rewarded, and that irritates me. Trust me, they're all thinking that. They won't admit it, but they are, right? You know, they want to short the market because they want to punish it. And the market doesn't give an F what you think, right? So we're in a defined uptrend. That's all you need to know. Number three, news is not a signal. It's noise. I say that because last week was full of news, earnings, Trump, Powell, whatever, fire this, don't fire. It's not a signal. You know, we got the big, I say that because you get the big sell-off on the 31st and you've got the backdrop of all that noise. Oh, is he going to fire him over the weekend? You know, we all turn into, I think my PC may be locked. You still got me, John?
Yes.
Yeah. We all turn into going to high school again. Rumors, personality conflicts, who's in what clique. I mean, I say that because to me, it's so true. Like, none of that crap matters to the market. It's not sitting there wondering over the weekend, is he going to fire Powell? Is the Fed independent? You know, I mean, there's just umpteen things to worry about. News is not a signal, it is noise, right? Yes, there are minor exceptions. I'd say, you know, if there's going to be an interest rate change, or sometimes when CPI was much more important in 2022, you want to be more aware. But 90% of the time, all that other stuff is just high school rumor and innuendo. Don't make it part of your decision process. So I've now framed in my mind, market's designed to go up. So pullbacks are higher probability by definition. We're in a defined uptrend. Pullbacks are higher probability by definition. I don't worry about news. So if I didn't know anything was happening in the market in terms of news, I'm not going to worry about it. I don't know why I can't switch to my charts, but I was going to show you, and maybe we'll have to get John to do it. Oh, I know what I need to do. So I just wanted to show you on the Russell what was happening on the 31st. Because to me, that's kind of a blood in the streets sort of day. Like we said, in the context of what's been happening in this big run up, we go sideways. Oh my gosh, big sell off. And then of course the news is probably what it made this day. And I'm just picking an example. I'm not saying James said this was blood in the streets. He was more thinking over here. But
Right.
you could see, right? Let's make this big, scary, bearish case. So this shaded box is a balance area. We broke it. We closed below the 200, which is the orange line. We did hold the 50, by the way. You could argue that we just triggered a cup and handle down, right? So there's a lot of reasons why you could say, you know, hey, this market could be falling apart and go down. But here's what I do in addition to setting my mind right, is to say, you know what, I'm going to lean on my chart work. And my chart work is done when I'm in a calm state of mind, right? Because what you see in the moment sometimes gets clouded to what you see when your mind is calm. Your mind's kind of plays tricks on you. And I think that goes back a lot to noise. What are people saying on Twitter? What's going on CNBC? What's Fox Business News saying? All that nonsense. And as you can see, this area here, I've defined as a support area, right? So when we're on this day, this is here. And I've got it in my notes. We pull back to 2180 to 2160 zone. That's a long in the Russell, period, full stop.